All right, what I can do from here is selectively unmute you if you have a microphone and you're ready to talk your way through um, your research ideas. What I want to do is just unmute one person at a time so that we minimize the feedback. And in the past, that has been a problem. If you get too many people with the live mic, it can be dysfunctional. So what I thought I would do is either in the chat, or you can send me a question if you're ready. If you're ready to go, I think that you should have a little button that lets you raise your hand, and I can just take the first one, and then if you're ready to go, and maybe what I could do is cover mine. I think some of you guys were on the one that I just showed. So essentially, what I'm let me just cover mine right now, based on some ideas that came from Kieran and Catherine in our coaching sessions this past year. One of the things that we found really effective was that the swing trade time frame and the BMR were where they were more effective than on the intraday, and so they have been shifting their attention to the longer term time frames, still doing research on the intraday stuff, but um, in order to take advantage of what's working while the sun is shining, they're working on some BMR ideas. And so out of our discussions came the idea of doing a BMR turbo. And the idea there is that in the same way that swing trades can provide information in the shorter time frame so you can turbo intraday. In other words, you have a swing trade that's working. There may be some intraday movements that become low risk because you're trading in the same direction as the swing trade in the larger time frame. That maybe if we scaled that up a time schedule, we could actually turbo the BMR. So if we could find uh, in the BMR system where the real strength leaders were, then maybe we could find some very efficient swing trades that piled on BMR when they were working. And Kieran's idea was that if you saw something moving up the ranks during the month, that maybe there, and it was moving up faster than the rest of the market, maybe there would be a way to get a swing trade out of that so that you already had a position into it by the time you were formally ready to own it at the end of the month when you do the normal calculation. So the idea there is a BMR turbo, and so I'm designing a spreadsheet that will allow us to do the for a lot of different populations of symbols, not just the BMR, but I'm going to put probably 500 or 600 symbols into that, the potential for it. And then it'll compute some daily performance numbers, and it will give us variable weighting. So if you wanted to tweak around um, weighting the different time frames differently, so I'm going to add in 1 week, 1 month, 3 months, and 6 months, and you could fiddle with the weights on that. It would give you a time series that shows for a given population what things are working. So I'll have a prototype of that this week. My intent is to have something polished by the time of the workshop so we can demo that tool and see how that might add value both to the BMR but also add value into our swing trade timeframes in the form of a turbo. So any questions on that one? That's gonna be the essence of mine. I go a little deeper uh, in. I gave a longer description of that in the weekend workshop, but I also recorded that, so I'll hang the longer discussion in the chat room as a separate link. But that's essentially what I'm going to look at. I also want to. I will cover Rick Wise's stuff as well. He's in China right now, and let me see where he's he's being blocked by the Chinese both on Google and Yahoo Mail. So he's looking at the a Quick Frog project. Um, yeah, so it looks like Gil and Sonal are going to look at his stuff. What he has already built is a set of quick frog mechanical trades using 1-minute charts, and so he's built a database of the standard rule set as applied to those trades. And now what he's gone through 2 different sets of uh, changes on the exit strategy about whether it's a trail or not, or whether to take profits sooner or later, or trying to modify the exit rules, and then tracking to see what that would do to the overall performance of the rule sets, um, uh, or tracking the different rule sets over the same standard set of slides, or same set of case studies. And the idea being there is that it's actually an engineering task for him to work on how to express a particular single change in a rule, and then model that through a changed rule set, and then compare that to the larger database of case studies, so we can start evaluating changes to rules in a systematic way. So it's a little bit of learning the craft by doing, as well as providing insights into the variations of the quick frog. So the variations he's looking at include the idea of that improved hybrid frog entry that I described in the chat room a couple weeks ago, and the modified exit strategy that allows you to keep more of the trade. So that's a quick look at Rick's stuff. He wanted to be here, but again, the Chinese internet was closed to him, so he couldn't be here. All right, so that's me and Rick. Now, is there anybody else that's with a microphone that would like to give us a quick look? If so, just raise your hand or notify me here in the chat, and then I can get you started. Okay, I see. Okay, James, let me get you started here, and Jeff, you'll go next. Let's see, James. Okay. Okay, James, I've taken you off mute. Can we hear you?
Can you hear me? Hello? Hello? Can you hear me?
Oh, wait a minute. Didn't have my headphones on. Go ahead. Try it again, James.
Okay, can you hear me now?
Good to go. I couldn't hear you, but then I didn't have the headphones on, and now it looks good. So I'm going to put myself on mute, so go ahead and have at it.
Okay, thank you. First, since I'm relatively new to the chat room and so forth, I just want to give a 30-second introduction. I took Ken's swing trade workshop last May, and I've done the core workshop video a couple months ago. I've been watching Ken's videos since last May, but due to some personal issues, my trading time this past year has been very limited, and I only now have a short window to really start to spend significant time and energy on my trading. So I say this because to say that that what I'm proposing has not had a lot of work done to it yet. So it's so any inputs to directions and pitfalls that I may be encountering are welcome, and I really value this cooperative approach that this forum is about. The goal of my project will be to develop a BMR system that is responsive to the upcoming bear market whenever that bear market comes. Its goal is to maximize return while minimizing downturns and volatility. I plan to use ETF replay as the initial test engine. Other methods and test engines may be necessary, but I'll get to that bridge when I get to it. I'll be defining a set of a portfolio or a set of portfolios with inverse and or bond ETFs, with the beliefs that inverse ETFs and bonds are more favorable in a market downturn. And then I'll analyze other variables such as the moving average filter and the use of multiple portfolios as well. My open questions right now is, does the relative strength methods that we typically use for BMR, does that respond quickly enough to a upcoming bear market, since bear markets can happen very quickly? Certainly the use of stops are critical to maintain our capital, but can we switch that to a profitable situation? Another open question is what is the definition of a bear market? I wish I could be attending Mark's workshop coming up, but my work schedule is just not going to allow that. So at this point, what I'll be using is Van's definitions of market conditions. Another open question for me is, are multiple portfolios required, and if so, how do they interact? Another open question or concern is we must be mindful of data mining, i.e. optimizing for past market performance instead of future possibilities. So that's about what I've got so far. If you have any questions or suggestions, I would love to hear them.
Okay, sounds good. I'm going to go to the, if we go to the right board on the workshop info for attend days that I'm showing right there. This is where we can, we have access to everybody's email. So if there's a note that you want to send somebody, I've got a couple comments to send James by separate email, then we can use that you don't have to just be the folks that are doing the direct peer review, but if you have some thoughts or ideas, by all means, send them along, and I'm sure everybody would appreciate that. So thanks, James. I got it. I'm going to shift over now. I'm going to put you back on mute and shift over to Jeff. And then Srini, you'll go after Jeff. So Jeff, fire when ready, Gridley.
Hey, Ken, can you hear me okay?
Yep, good to go. Is the young lady with you?
Excellent. She's not. She is asleep because it's about 2:15 in the morning here.
Oh, oh,
So I often, I often take the night shift. Anyway, I'm often up working late, so it's not that much later than what I've been
okay,
doing recently. So I'll speak on Sonal's behalf as well,
okay,
just to give a quick update of what she's working on. So for hers, she's calling it RLCO pattern one by the stats. And so this is hunting for the sweet spot. Um, and so this was kind of born from the presentation that she did at the last Kansas meetup in November, where she talked about farming versus hunting and doing a combination of the two. And for guys who are on the call here that might not understand what that means, it basically just means splitting your position into um, a farmer piece, which is sort of 4/5 of your position, and a hunter piece, which is 1/5. And so taking profit with the farmer piece first, and then trying to hold on for a potentially larger gain with the hunter piece as a mechanism to satisfy two sort of conflicting inner people. Hopefully that makes a little bit of sense. So one question that she's had since then, she's been doing a bunch of training and a bunch of testing using RLCO pattern one specifically, and one of the questions that came up was, does it make sense to farm to take your initial profits at the Bolly band mean after an RLCO pattern one? With the general idea being that the Bolly band mean should be the highest probability of that profit target being reached. And then, so does it make sense from a numbers point of view? Meaning, do you make enough by getting to the Bolly band mean? And so what we've been doing is putting through some mechanical testing to see how often price reaches different targets. So the different targets being the Bolly band mean, the edge of the river, and then the floodplain, and then possibly beyond. After one of these RLCO pattern ones happens, and then when these happen, what's the sort of average R return that you get from each scenario? And this is kind of born from, if you guys could picture the RLCO pattern one, at the time of entry, the standard way that Ken sort of frames it up is by trying to get in before the river on a long, stop at the edge of the floodplain, and then targeting, say, the Bolly band mean, and then the other side of the river. But by the time the trade progresses, the river and the floodplain are all sort of degrading against you. So by the time the trade comes to pass, you've kind of what you might expect would be an R in profit at the Bolly band mean is actually more like a half an R, sometimes less. So we're trying to put some numbers around how that comes together with an aim of determining the most effective way of managing these trades. And then we also want to try to include possibly the failed RLCO pattern one signal. So when it doesn't work and the market carries on down swiftly, can we hop on board for that? Does that make sense enough, Ken?
yep, I think I got it. So
Cool.
let me make sure that with this little sketch that I'm putting in here. So at the moment the RLCO occurs, imagine that was a straight line. If you
Yeah.
set each of these as sort of the price threshold of potential gains, right? And then
Yeah.
once this occurs, then maybe is there some kind of distribution pattern that looks like this? Say, how often does it get to the edge of the river? How often to the mean? How often to the far side of the river? How far to the far side of the floodplain?
Yeah.
I suggest probably before a reasonable exit occurs. Now, whether that is I guess what I would ask you to think about is, the most unconstrained one would probably be if this was the signal to enter and you had some kind of standard stop here, if that just stayed static, how often does it get to here, to here, to here, or to here before it takes out this?
Exactly. Yeah.
As opposed to that, I think you probably want to start off with that, sort of like
Yeah.
a maximum favorable excursion, and then keep it
Exactly.
open until it was voted off the island that way.
Yeah.
That would also not only give you a good profile of what's reasonably available in here, each one of these now becomes marbles in the bag with the probability of being achieved. But
Yeah.
it would also tell you something about how fast you want to accelerate the move, or to raise the stops.
Yeah.
Are we getting out too soon? And yet this thing, we didn't give enough time to get up there. So I think that's a secondary research question, which is best answered by establish the initial risk and then leave it there,
Yeah.
and then see how far it goes. Maximum favorable excursion, I would say.
Yeah. Yeah.
Yep,
That was
makes good sense.
basically the idea we had in mind. Yeah.
Okay, that makes good sense.
And it's also, and the other thing is not only how often does it reach there, but what sort of R are you looking at on average
Right.
when you hit those targets? Because it's, we found it, sometimes, you're getting to the floodplain, you'd expect to be up maybe 3R, but actually you're only up 1.5 because things
Yeah.
have been kind of moving against you as it's kind of gone a bit quiet after a big move down, right?
Well, that's why I would say if at the moment of entry, hold these whatever those price levels were, maybe hold them constant
Oh, okay.
as opposed to having it track the course of the river.
Yeah, okay.
Because the initial idea was that when you get this move here, it was based on a reward to risk ratio that in that moment. Now
Yeah,
later on, you may make a decision that says, "Hey, I want to meet it at a certain target," but maybe if you can uh, figure out what the excursion is based on the original frame, and then maybe
yeah,
then the modified frame as it adapts through time. Um,
yeah. That makes sense as a comparator. Yeah,
yeah, because then I think what you could do is you could actually see, you could run that right to the find the time period when it actually crosses that red line, almost if ever,
yeah,
and then just do the look back and say, in this open time frame, what was the max price?
yeah,
And then it allows you could compute almost a z-score of performance
yeah,
against that original one. And then that would be very useful to know, because then that tells you, should you worry about the shape of the river or whatever, or should you just stay true to whatever the original frame was.
yeah,
Uh,
yeah.
it,
That makes sense. I like
so
that.
in
Yeah,
the same, so we take the basic trade frame, keep the original risk constant, the original ladder constant, then map the actual excursion, and then see how that shapes. And then from there, I think the experiments would be, now what does that tell us about raising the stop, but also adjusting the expectations as the trade develops.
yeah.
So somewhere in between those two ideas will get explored in there. Anyway, that's my thoughts on that. Okay,
Cool. Thank you. Yeah, that helps. Okay, so should I move on to mine?
please.
Okay, so I've actually got a few projects that I'm working on sort of concurrently, but I picked this one because I was dealing a bit more with the BMR side.
Mm-hmm.
So what I'm interested in doing is BMR, but using currency markets, so using Forex, with the hypothesis being that currency markets tend to make long trending moves. And so if we could isolate the performance of each of, say, 8 major currencies relative to its peers in using sort of a BMR style blend,
Mm-hmm.
and then kind of combine them back together into the currency pairs that are actually tradable. And then what we do is take all of those and rank them. It'd be about 28 pairs if you were looking at 8 currencies. Then the end result should be that we're looking at a pair that's showing us a way to trade the strongest currency versus the weakest currency at the moment.
Okay.
And so if we do that and pick maybe the best couple, 3 or 4 in sort of a standard BMR style, hold it for a month and then rebalance. Or in fact, do what you were talking about earlier today, which is see how you can hop back on board that when the landscape shifts, maybe a little bit earlier. But yeah, so the general idea being BMR using currency, which is only a little bit different because you kind of trying to isolate out that the actual currency rather than doing it straight, so as a straight currency pair.
Okay. Um, What will you use to compute the individual currency? Uh, I mean, there's a bucket of or there's a basket of ETF or currency ETFs.
Okay.
Um, uh, so, is there a better way to do that? Is there some way you do measure directly on the currencies themselves, or is it like
Yeah,
normalized against the dollar? Use that as sort of a standard benchmark or
you
standard
can.
base.
Yeah, that's you know what? That's how I've always thought about it before. Because or you could even use futures because they're all priced in dollars and they're all
Yeah.
quoted the same way around. But that doesn't give you that many that doesn't give you that many options. So I've found an article to something one of the guys at TradeStation did, which is kind of a clever way of basically looking at like say you've got the euro versus but the majors are going to be euro, pound, dollar, Aussie dollar, Kiwi, Canadian dollar,
Mhm.
and yen, I think. And then what you can do is basically say you take each one of those and do a relative performance for each one versus itself, and then you can add them all together.
Yep.
And then I've got an algorithm for it basically that makes sense.
Okay.
And so then that'll isolate the currency itself, and then you can basically rank the currencies directly, or you could just put them back into pairs and then try to find
Okay.
stronger
So sort of is it reverse engineering the pairs across the board so you find out what each is
Yeah,
you reverse engineer to find out what his individual uh, performance is. So instead of a comparison
exactly.
matrix, you're unpacking the it's uh, it's like a MANOVA, a multiple analysis of variance, but you back it out to the individual components.
Yeah,
Got it?
you actually sort of take it apart into its individual currency and then put
Yeah.
them back together again in order to pick a position in it.
Yep. Got it. Sounds cool. Yeah, we may
Yep.
discover. You'll probably discover that there's that where the BMR uses sort of a month as the pulse, that there might be a separate pulse for the currencies. That's a better unit of time. You know,
Yeah.
maybe it's a week. I don't know, but that's sort of what we're going to discover by going to sort of a daily pulse, a daily measurement of the BMR gives us the extra fidelity, so that the day after you find out what the new BMR candidates are in the indexes, then there's 30 steps that you, or actually 22 steps that you take before the next decision gets made. So each day you're getting closer and closer to the new one, and you can watch the horses changing positions. So there's sort of a flow to that.
Yeah, I love that idea. It's something I've actually thought about a little bit before is,
Yeah.
plotting them all down as even just relative performance to each other,
Yeah, I
and then
think
seeing how that thing changes.
I think it wouldn't be painful to take the currency ETFs. There's about 8 of them. If you look on the world market model, there's a listing of them.
Yeah.
And I don't know how strongly correlated. I imagine they would have to be pretty strongly correlated to the underlying currencies. Otherwise, people would game the shit out of them. So that might be a poor man's way to quickly do the daily relative strength.
Yeah.
Um, so that would be my
Yeah, I'll check
thought.
that out too.
Okay. All right, brother.
Thanks.
Okay, I'm gonna put Jeff back on mute and shift over to Srini, and we'll give Srini a try. Okay, Srini, how can you hear me? Let's give it a try.
Uh, can you hear me now?
I got you loud and clear, sir. Over to you.
Okay. Uh, Actually, I don't have anything like research because I just finalized this Friday. Except that, I mean, you asked me to do that 30 trades for the swing trading. So, which I'm just doing like a tracking right now, and then creating that standard SKN things.
Yep.
So that is what right now I'm doing. So yeah, I've attended a swing trading course last year, like October. Like since then, like I mean, I'm trying to get a good hold on the systems I learned in the workshop. So what I'm thinking, like I mean, I still need to learn these systems taught in the workshop. And once I'm gets hold on these systems, uh, maybe I can focus on research or like maybe some adding some discretion uh, to the swing trades. So that's my objective here.
Okay. Is there a sufficient number of symbols in the Pakistan and the Indian markets to give you a good set to choose from, do you think?
Do you want me to give that? I mean ETFs you're saying?
If you have ETFs, I think that would be preferred, but it may be that individual large cap stocks might make sense as well. Anything that has a lot of institutional money and interest, sort of like the equivalent of our Dow 30 industrials or the S&P 100. Those tend to move in more regular patterns than some small and mid caps. So I would give that some thought to see. And one of your research might be to see if that
Uh-huh.
same pattern of price behavior uh, is the same in your markets as they are, say, in the U.S. or the other global markets. And that is that.
But Ken, I live in US, Ken.
Okay. Oh,
So I live in yeah, yes. So still, typically, yeah, I follow the Dow 30 and ETF 30 right now.
mm,
Uh, so yeah, so I mean, yeah, and I mean, I'm not looking at any Indian stocks right now.
okay. So what is the population of symbols you're going to consider? Any of ETFs for that area, or are you going to look at U.S. market symbols?
Right now, I'm looking at Dow 30 and ETF 30 things.
Oh, okay. I'm sorry, I misunderstood. Uh,
Oh, okay,
so looking
right.
at ETF 30 and Dow 30. Is
Yes, yeah.
that about right?
So I've sent, yeah.
Okay.
So I've sent like all that the trade frames, like I mean, and then all the trade results through the Excel sheet to you, and then the reply I got from you saying that like I mean from April 20 like to May 20, like if I can provide a 25 more,
Yeah.
30 more trades, like I mean,
Yeah. I
so
think I
that's
think you
what
should
I'm
be able
trying.
to. Yeah.
Yeah, I think I should be able to. Yeah, so that's where I'm focusing. Like, I mean, I try to get more swing trades. Like, I mean, and I want to see that. I mean, I'm still following my rules and then not doing any mistakes and getting the results like
Okay. Sounds good.
that.
Just yeah,
That's
make sure you're maintaining your trade journal and your learning journal in addition to marking up the case study. So we want to see
yeah,
what
sure.
want you to comment on the effect on your trading process of going through the accountability and the bookkeeping uh,
Okay.
discipline as well. Okay, sounds good.
Oh, okay. Yeah, thanks.
Okay, I'm going to put you back on mute. We'll shift over to Margaret. There we go. Margaret, how do you hear us? Or give it a try.
Can you hear me now?
Yes, ma'am.
Okay, great. Okay, so there's a couple things that I've been working on with BMR, and the main thing that for the presentation I'm going to do is I recently, after a conversation with Clark Smith, who's actually been in a couple of your classes, Ken,
Yes.
he had mentioned that he mentioned something interesting to me on the phone a couple of months ago, which was that the BMR really seemed to perform better when international markets were ahead. And so after the conversation with him, I'd also been reading a book called Dual Momentum by Gary Antonacci, and that's how you say his name. And so we actually we did a bunch of back testing based on a filter that would be, whether the S&P, the world index, including emerging and developed markets, and or like SHY, which one was leading. And if the internet, so depending on which one is actually leading, we use a different set of ETFs. So we actually rotate the selection of ETFs that we have.
Nice.
So if international is ahead, then we use pretty much a predominant. We use a different set. So anyway, we went back and took a look at that, and it really seemed to do just better in shifting between two different sets of ETFs based on the screen that we have. So just going to show those results. I've also done a lot. I think Miss Christine's email earlier said we've done stuff as far as looking at profit taking, doing 5% trailing stop loss, 10% trailing stop loss. We just really looked at it a whole lot of different ways, so we can also talk about some of those. I can talk about some of those results as well with that. But yeah, it's pretty interesting what a difference it can make to kind of just switch in the mix ETFs you're using.
Yeah, when I looked at this, this is sort of a combination of what you just said and what James was talking about, performance in bear markets. When I took a look at the failures in ETF2, which was a weekly adjustment, but which has some, it's like a first cousin of the BMR. What I discovered in the ETF2 was that anytime these big fat indexes had got past 15% gains from the time of the entry, that was sort of a threshold for what we would call an exceptional gain. That the truth changed after about a 15% move, and that was if you were ever going to either tighten up a stop or take a partial profit or be ready to cash it on a good day, 15% was sort of the threshold. And then we looked at losing streaks in 2008 and 9, and it was something like if you had a bear market, that if you ever were holding a 10% gain, in other words, it had fallen 10% from your entry, you'd be really happy if you just took 10% in the moment, sort of like free cheese, because in terms of relative performance, what you got was a really nice addition to your equity. At the same time, any reasonable benchmark was getting crushed, or guys had incremented the cash and weren't making anything. So even though the 10% might not, be a large part of what the bear offered, being able to salt away 10% chunks made a very nice difference during a psychologically difficult kind of a market. So I mean, I'll be yeah. Go ahead.
I'm sorry. Was that was for weekly or monthly? Regular BMR or?
Yeah, that was for a weekly system. But what we found was that the weekly adjustment system was getting big gains in the matter of like a month to 6 weeks. That sometimes you get a 15 or 20% move in the first month or 6 weeks, and that was so exceptional that would have been a time to really consider locking it in, because it's hard for an ETF to sustain that kind of rate. And rather than going from, if you're already at plus 15, the chances that you go to 25 versus all the way back to 5, you'd have been much happier keeping a bigger chunk of the 15. You know what I mean? Instead of just using a trailing 10%, that 15% was a benchmark of a good time to change your mind about the trailing stop. So I'll be interested in seeing what you guys come up with on those ideas. And same idea out to James, just think about, I think of it sort of like a windfall profits. If you get 10%, if you just be really happy with a 10% gain in a bear, well, why not get paid a little bit? So, okay, this should be fun.
Makes sense.
And it looks like you have
Great.
Jeff and James both working with you on that one for reviewers, so I think you're good to go.
That's great.
I should also say, yeah, Kieran was not going to be able to be here tonight, but he's posted his comment. He's going to do the distance learning, and so he's looking at a BMR for all seasons. And so part of this thing we're doing with the turbo is to extend some of his ideas, also to see if we get a sideways market for an extended period, is there something we can do to shorten up the time frames? And that's really he's kind of partnering with me on this idea for the BMR turbo. But that's kind of connected to what you're talking about too, Margaret, on the that if you have a protocol that tells you what kind of a market we're in, maybe there's a way to shorten up the holding or shorten up the expectations. You know, when is it time to cash it sooner rather than later? So
Yep.
more to talk about there in June. So okay.
Great.
Anybody else have a microphone and a willingness to talk? If so, if you can just kind of click. There's Martin. Okay. Let me get you off the mute there. Okay, Martin, good to see you, my friend.
Likewise. Can you hear me?
Yes, sir. We're good to go.
Okay. So I've been thinking about a topic, and my current work situation limits me in how much I can trade and what asset classes I can trade. So I think I'm going to do something using RLCO at a daily time frame to do swing trades,
Mm-hmm.
or at least investigate that. One of the things that I have to worry about, unfortunately, is that I can't use stops in trading. So it has to be sort of very well conditioned towards profit, and then probably beginning on either ETFs, probably something like ETF 32s, if that gives enough opportunities, or otherwise maybe some larger subset. Probably part of it would be sort of figuring out what that could be.
Mm-hmm.
Again, the use of ETFs makes it easier because I don't run restrictions around individual stocks that might occur.
Okay, let me send you the. I can send you the liquidity stats on like a ETF 100 if we're interested, like in the.
Oh yeah, that would be helpful.
Like the daily dollar volume of the last 30 days, something like that, as a subset.
Yeah, that would be helpful.
Okay. Are you going to look at isolate the different patterns to concentrate on, or are you going any of the 7? I would suggest probably 1 and 5.
Yeah, I think
The
idea would be
yeah,
to focus on one, see if I can automate that on a larger set of ETFs.
Yeah, I would suggest also, I think the 5 is an interesting one too, because it bakes a little more safety to the downside in there, because you have you're not playing a rebound from an extreme. It's like the opposite of that. It's giving you a sideways quiet channel. And if you think about what Microsoft has done, that's a pretty good. And that what it'll do is it will also catch a successful RLCO pattern 1. So if you think about pattern 1, that occurs after an extreme move down, and then it rebounds back to the mean, and then it chops around quite a bit. There's no follow through. Then maybe 10 or 15 days goes by and it hasn't failed further. The volatility has started to shrink, and
Right.
you still have, you now start thinking in a longer time frame, well, maybe the bottom is in, this is the new normal price, and now maybe people will see this as a value play. And so then the breakout in either direction looks like the next leg out of that consolidation zone. So
Right.
on a swing basis, I think that has a lot uh, to make it attractive. So if you look at Microsoft here, I mean that's not even, that's like cherry picking, but
Right.
that idea occurs quite a bit. CLF, the Cliffs Natural Resources, has done that lately. A lot of times you'll see that in XLV, which is I think the healthcare. It goes up a nice, it climbs a ladder and then levels off and makes a sideways quiet channel, and then goes up another level, calms down, goes up another, so it goes up in stages. And a pattern 5 can work in that area too. So if the pattern 1 and pattern 5 are the most easily identifiable by a scanner or by rules,
Hmm.
so
Right.
I think that could help with pattern recognition and backtesting. Okay.
Thanks. Yeah.
Okay. So, I've went ahead and posted that there
Yeah. So that's
in the
fine.
whiteboard there. So we'll give that a try. Okay.
Yeah.
Let's see. Um, let me put you and Margaret back on mute. Let's see who else we have. Joey's here and Yasik. Either of you guys. Okay, Joey's got his hand up. Let me shift over to Joey. All right, sir. Over to you.
Hello, sir. Hello, everyone. Basically, what I was doing is I was planning to do paper trade, and then I was thinking that before, instead of just doing it on my own and try to learn from my own, I can do. Basically, I'm doing paper trade, and then I'm taking a look at my journal and learning from my trade, my good and my bad thing that I've been doing, and going from there, I'm gonna try to make a presentation about what I get from it, because I never kind of trade before. It's all new for me. So I thought that there's a few things like these days I had a hard time at the beginning with the RLCO pattern 2, 3, and 4, I would say. So right now I think I started to get it and understand about it, and I had to modify a bit my way of exiting. So, and I came to realize that maybe it could be interesting to have, I know maybe it sounds obvious, but way more than one way of exiting according to what I see in the market beside the RLCO curves. So so far this is one thing I'm learning, and also the at the opening of the day, this is something I think I might be able to improve a bit. Um, pick pick one or two stock that I want to follow from the opening within a few seconds after it opens. That this is something that I'm probably going to be able to improve in the next few trades also. So all of this is I'm learning from these trades, and basically the idea is to try to share my observation and learning from that to my teammates and to the people there, and also learning from the others.
I think this is a good idea. The mindset I would like you to think about when you're stalking a couple symbols right from the opening is think about lions when they are hunting in a herd. They watch that herd come up to the watering hole and they look for the old, the sick, and the young. And then when they make their charge or they spook the herd, there's a whole lot of activity going on, but all they do is concentrate on the target and they screen out everything else because all they can do is kill one at a time anyway. And so everything else besides their target is noise. And watch how relentlessly they focus on that target. If they miss, it doesn't matter. It's a low risk idea. If they kill, then they can feed the whole tribe for 3 days. And so a lion never
But
worries about the target of that he misses or the ones that get away. He's only looking at the target.
which one you said the lion's looking for, Ken? Because it lags a bit or it cuts and I missed it.
Yeah. They pick a target that's the easiest one. It's old, sick, or very young. So
Oh,
something
okay,
that,
I see.
yeah. So it's something that is, they look for the easier one, the obvious one. They don't try to make it too hard. So
Okay.
they work on the edges. So in that sense, when we identify things by swing trade patterns or good frog numbers or a recognizable pattern, then that's something that is the equivalent of a target of a lion picking a particular target. So as you try to work on that idea right from the opening, I think that should be the psychological state that you want to be in. A very focused hunter, ignore the noise, really just concentrate on that target and refine the technique on that one target. And then I'll be interested in seeing how helpful the trading journal and the daily discipline is for documenting your learning. I think that's a really important thing at this stage for you. So good. I think
Okay.
you're in good shape here.
Thanks.
Let's see. Well, we have. I'll put you back on mute. And let me see. I see Jacek. Jacek, have you anything for us tonight? Oops.
Hello.
Yes. There we
Can you
go.
hear me?
Yes, sir.
Hello, everybody. Hello, everybody in US. I'm in Europe, so for me it's in the middle of the night, but it's not a problem at all. Actually, I have uploaded a file, a Word file into the chat room, and as I sent you email, I think you can see this in the chat room, and actually. I'm using RLCO idea, and I wanted to add one more dimension because I'm using the standard, the classical RLCO framework, and I added to this RLCO to the Renko charts, and here are some modification to the RLCO frame for the Renko, and I have presented on the second page one example of the traits and how it could be worked. Actually, it is mostly choosing the pattern 1, but my choice for adding another dimension, another lens in the Renko is to be more confident in trading.
Yeah. Which room is it, in the chat room or Basecamp? I'm looking for the file so
Sorry, this is in the Basecamp.
Okay. Stand by. I'll see if I can. In the files section.
So if you could please open this one, it will be easier to talk about this one. Thank you again for the last email you sent me, and I'm reading the Pitbull book. It's really great, and
yes,
there's a lot of truth about all of us, and especially about me. And so I'm on the way to finish this book in 2 days. So see, I'm using LCO as mentioned, and I wanted to add another help for me. So I decided to choose Renko charts as presented on the second page, and I wanted uh, to check the hypothesis whether it is possible to earn consistently 5 hours per week. Also, my current situation, to choose between to be a day trader or to find another job, another occupation, and I present here an example of a trade, or but I was thinking about checking this idea with the Ninja Trader platform that I'm using for the charting. But here I have done some checks with that, some testing. The results were quite good. So wondering, could it be true? And I was looking for the forums, and I have found some comments from the guys who were also impressed with the results using Renko charts with the Ninja Trader, and the comments were they are not reliable. The backtested results are good, or very good, but if you go to one of the tabs in the Ninja with the orders and with the charts with the orders, it is not that, because they come to the point. I'm an idea right now that it is not actually programmed platform. It is for free, even if you buy if you have a full version which is paid. The quality of the programming is not good. So believing the backtested data is not a good idea. So the only solution here is to check this with the real trades, with the real to have a live population trades.
Yes. Well, I can say this, that I have been using tick charts when I do the futures. With so so a tick is whenever there's a difference in the bid or the ask, and it fills up. So if I do like 250 ticks, every time there's 250 transactions in which the price moved, it creates one bar. And so what'll happen is you get the same kind of effect as a Renko, except it has to do with if price starts moving directionally like this, you get a whole bunch of boxes in a hurry, because as the price goes up, you get tick, 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 tick.
Yes, exactly.
And it has sort of the same idea as the Renko. And you end up getting these kinds of little moves where you see you only get one adverse move, and then it takes off again, and it allows you to it's a smoother looking curve than maybe some of these.
Yes,
so
exactly.
I certainly would say try it live trading forward with one share or with paper trading, so you can trade it forward live and see how that feels. And then what I do with the in the futures is that if I'm taking this trade and my stop is here and then it moves up and starts going, I can just drag the line and just keep pushing my line up underneath. And then when it does reverse, it hits my line, and then I can capture this. So the visual trading on a chart, in my view, is a very nice way to take advantage of the orderly movements that you see in standardized Renko or tick charts. So I would say that that's certainly worth exploring to see if that technique can work for you.
Okay.
I would say also the same advice as with Joey, and that is it's really important for you to be documenting your trades and documenting your feelings and your observations about the trade management in your trade journal for each trade, so that you can learn to identify those feelings as they occur, and you don't allow the feeling to change your rules, but you just notice it and then come back and study it at a later time. So I think you're in good shape there.
Okay.
Okay. And anything else you want to cover from from this? We're in good shape right now.
So actually, so I'm using this concept from the beginning of April, and so I have a trading journal, but not so many trades. So, I mean, the back testing with the Ninja it doesn't make sense. So as you mentioned, I have to trade this. I'm lately trading XIV.
Yeah.
And I will document all my trades, all my feelings as I'm doing this right now, and I'm drawing conclusions from my trading journal, and it's a very good source for knowing our own and to move forward.
I would like you also to add the symbol for the Dow 30, the mini Dow, which is YM, or if you're using, the Dow mini, or if you're using the ETF, the symbol is DIA. And the reason is that it's like it's the opposite of XIV. It does not move as violent. It does not move as violently as XIV, which is a super derivative, right? There's no underlying entity.
I know that.
Yeah. So I think DIA gives you the other side of the coin for regular routine trading, and you can engineer your stops very tightly with it because it's not as fast. So I think between DIA on one side and XIV on the other, you have a very conservative symbol and then a very vigorous symbol. And that will help you figure out which one of those is more attractive to you for professional trading.
Okay.
Okay.
Okay. Thank you for that advice.
Okay. Let's see. We have real quick here. Mark, do you have anything you want to chat at us about?
No, I don't have anything to add. Thanks.
Okay, partner. If you have any thoughts for James about bear market classification, if there's any handy ways, easy ways to program or to identify that might supplement Van's ideas, that would give him a help, I think.
Sure.
Okay. All right, guys. Last chance once around. Anybody need to add anything? If not, I've got this. I think I remembered to record this. Yes, I did. What I will do is process the recording. I'll put the link in the Basecamp just for us, so that you can, if you need to come back and refer to it later, that we can. But I really appreciate you guys pitching in on short notice. I'm going to contact the other guys and try to work up a similar meeting with them this week, and then add that to the Basecamp as well, so that we can hear what everybody's doing. And the next thing would be to make sure that you're signed up to peer review 2 other papers, and that way we get everybody with some additional help in this next month coming up. So appreciate everybody's efforts, and we will see you in the chat room and in Basecamp. This should be a lot of fun. Keep up the good work. There being no other questions, it looks like, I say go to sleep, everyone, especially you, Jeff. 2 o'clock in the morning. You need to have your head examined.